And hello, everybody. Here we are today with another must-see Austrian Economic Monthly event run by the Austrian Economic Center together with Competere every end of the month. As you can also see from the banner, which is in the background behind my back. Um, this is the freshest series of live streaming seminars or current hot topics about politics and economics. And also let me remind you that we are broadcasting live on Zoom and on Facebook, and that every webinar will be then uploaded on the Austrian Economic Center and Competere's official social platform. So you can you can join again, you can watch again our live events also from our official social media platforms. Well, with no further ado, let me briefly illustrate the topics we are going to discuss today with our excellent guest. The title of this live talk is Stocks, GameStop and Game Over, question mark. Very catchy title, I would say, that includes basically two main issues. One is about the short squeeze of the stock of this American video game retailer GameStop, actually, and other securities that took place in January and February, and it was a big deal, actually, causing major financial consequences for certain hedge funds and also losses for some short sellers, and also it was maybe hyped by media, journals and television, and also the financial world, but we will try to answer also to that question after, during the discussion. And the aftermath of this short squeeze situation also led to a number of accusations of market manipulation against all the players involved, which is peculiar, I would say. Market manipulation accuses against the trading platforms, such as Robinhood and other kind of trading platforms. Accuses against the amateur investors who started the operation, this big short squeeze operation in the stock market, and also accuses against the hedge funds, accused to be the real power moving as a master of puppets the stock market by the amateur investors gathered in social media platforms. And also, finally, this situation led to an inquiry by the American administration and a parliament. So it had, anyway, a huge impact. Secondly, this issue poses more questions about the level of liquidity pumped up in the market by central banks in response to the economic and the health crisis that we are still facing. And also it poses question about what is really driving the market and what it can affect the market. That way, it seems legit to ask whether the monetary and fiscal policy conducted by the Fed and the other central banks are reaching their original goals, which was stimulating demand and sustain citizen during the pandemic, or they are contributing to inflating bubbles in the stock market. So as you can see, there's a lot on the line in today's debate. And let me introduce our speakers. Mr. Peter Jungen, who is chairman of Peter Jungen Holding, and he is an investor in numerous startups in Europe and in the US. And Gerald Hörhan, who is CEO and founder of Investmentpunk Academy, which is a leading online platform for financial education in German-speaking countries. And let me say that a platform like that is really needed here in Italy, where we need more financial education, in my opinion. So maybe we will see if Ryan McMaken, who was supposed to be our third guest, will join us. Maybe it cannot. Maybe some is facing some issues. We'll see during the debate if he pops in. And I will start with our first speaker, Mr. Jungen, then followed by Mr. Hörhan. And finally, I would just remind to our audience that they can make any questions both through the Facebook platform and the Zoom platform. So let's start with a question to Mr. Jungen, particularly about this GameStop case. This GameStop situation happened a couple of months ago. Why is this short squeeze happen, and what are the consequences of what happened in the stock market?
Well, maybe the initiators would love to redo it. And I'm not sure with all those involved. I'm very happy with what has happened. And the second thing, I'm coming to one, and the second is, I don't think that it has any major long-term effect. There are much bigger forces who play an important role. Why are not all happy who started? The stock was for years, for a year or two, was around 20 US dollars. In early, if you get the numbers right, it was a year ago about $2.50. In January 21, it was $20. In February, the peak was $462. Today, it is 165. So many people who have bought the stock over 100 or 150 or 160, and all those who bought between 160 and 450 have lost a lot of money. And maybe for many of them, small investors, is maybe all the savings they had. So they're thinking twice whether it makes sense or not to do that. The second thing is, if you look at the sheer size of this, this is, well, the famous word peanuts in another context. But if you look on the stock markets, and you look on the market cap of the largest in the US, then you simply come to huge sizes of it. You have 3 or 4 have a market capitalization of more than 1.5 billion. That is larger than the German DAX. So 4 stocks in the US, and the NASDAQ and the New York Stock Exchange, have a larger market cap than the total DAX market capitalization. And the largest in Germany, for instance, is a pretty old stock one, Volkswagen, now with 133 billion. So still, the markets are in a much larger volume, and therefore this event itself has not really an important, it's not an important issue for it. And the last remark on that, there are forces which are driving that, and which are much stronger. This is on the one hand, the innovation, which is faster in some parts of the world, on the situation of Corona, particularly in digitalization, and this is rather, of course, the gap in the world is widening, is more in the US and in China, and that we expect the growth rates in the economy this year to be larger, for instance, than in Europe, both in the US and in China. And second, it is, which is driving, is the huge amounts of Corona support packages, 1.9 trillion in the US. Not much less in Europe, but in the US, you add up those of last year, so almost up at 4 trillion. So you are in between half in Germany or in Europe or in the US, a third of the national of GDP. So we are in a liquidity of the world, and where is the money going? It must go somewhere. Someone is paying with the money, and he is paying someone, and someone will be saving money and not spending. So there is not much on the savings account. So where does the money go? Most likely to the stock markets. And so this will be a very volatile year in this year, and it will be rather be. You should go to the word bumpy is probably more appropriate than only volatile. So all in all, I think this GameStop is not as much a market event. It's very much a hype and media event. It is a bit like the old saying, giving a speech in economics is like, it seems hard to use self, but maybe not to most of the other people. And therefore, those who initiated this, they showed off that the markets were not prepared for that. And I don't think we need regulation. You have a lot of funding coming from small investors. You have in Israel crowdfunding. iCrowd, for instance, is the word for that. People invest in stocks, even in private equity and via iCrowd. So there's a lot of possibilities for people to invest their money, and hopefully for some of them, they find better investments than in GameStop.
Thank you very much, Mr. Jungen, for this insight and for raising some points, especially about the two main drivers for the stock markets. Maybe we can go back on that after Mr. Hörhan speech. I have a question now for Mr. Hörhan, related maybe to some of the points raised by Mr. Jungen. And the first one is, well, if there was actually any market manipulation in the case of GameStop, actually. I mean, there were many actors were accused of manipulating the market, both the small fishes and the big fishes, the hedge funds, but also the trading platforms such as Robinhood. So um, really happened a manipulation of the market there. Where is the truth?
Well, basically, depends how you define market manipulation. I mean, let's say, I give an example. For example, if 100 small investors group together and say, let's say, this stock is great, you know that it's probably junk, and then they all push it, and then they dump it, and it would be a classic dump and dump system. And it would be probably illegal. Yeah? GameStop is probably more not as clear whether it fall into this category. So it's more like a speculative hubris, and it hasn't stopped. I mean, today GameStop is up 40%. I just looked. So just to give an example, the game on GameStop has not stopped. And obviously, authorities in these types of situations try to investigate something, but I don't think anything is going to come out of it. Yeah? Because, I mean, obviously, if you use a concerted effort to manipulate the stock price, that's in most countries is illegal. Yeah? Whether in social media that would be a concerted effort of a few individuals, and whether it's just a crowd-based movement, is something which probably the courts will need to decide. It's not so easy to say. You know, there were obviously a few opinion leaders, but whether that's a collusion of a group of individuals or companies to manipulate the stock price is appears, it's at best speculative. I would suggest it's probably not. But obviously, these types of crazy things, I mean, are happening because the central banks have printed 13 or 15,000 billion dollars, and they have to print more because Corona hasn't stopped. Biden has announced 2,000 billion in fiscal packages to jumpstart the economy and to do helicopter money and to support the coronavirus vaccines. Europe will probably have to do much more too, because the governments are all bankrupt. Who is going to finance all of this? Lockdown here, lockdown there, Kurzarbeit and Umsatzersatz and all the help for all the sectors of the economy which have been deeply affected. I mean, the world is swimming in money, and it's like financing out of the printing press, which we have had in the past. In a world currency like the euro or the dollar, you can do it, at least within limits. In a non-world currency, like for example in Turkey, you cannot print money definitely in Russia, because then foreign investors are going to pull out their capital. Yeah, there's going to be problems of paying the foreign denominated debt. The countries go bust, and then you have a revolution usually. In a world currency, which is currently the US with 55% of the shares of world transactions, Europe, where the euro is 28%, and to a less extent, perhaps still the Japanese yen and the Chinese currency, and probably a little bit still the Swiss franc, which is linked to the euro anyway, and the British pound can afford to run the printing press quite long. Most other countries sooner or later will have big problems that their currency will depreciate, and capital will leave the country, and the country will not be able to pay its foreign denominated debt. The reason why world currencies can do it, because they basically have debt denominated in their own currencies. So if they print money, they still only have to pay the debt in their own currency or in other world currencies which are also printing at the same speed. The future is going to be quite challenging, I think, in the US. And also in China, there's going to be a fairly quick recovery. The US is going to vaccinate its population through. The $2,000 billion stimulus package means that there's going to be jumpstart the economy. It has been quite substantial in amount. I mean, just to give you an example, the financial crisis 2008, the TAP money was 700 billion. That was it. The stimulus is already not the first injection of huge money from the government into the system. It's the second or third, which means that the economy in the US is going to project it to grow quite fast, which is at some point is going to cause real world inflation, not just asset inflation. I mean, asset inflation is not only the stock market, but the bond market is totally crazy. The real estate market is crazy. The market for startup valuations and the market for classic privately held companies for private equity is crazy. The market for art, for cryptocurrencies is all pushed up very, very high. I mean, on cryptocurrencies or real estate or on shares, I have benefited from this on my own. So I see it, my life, and also the volatilities associated with this. But in the US, once demand comes back, if the people are vaccinated, there's going to be real inflation. Because I give you a simple example. Airlines have cut capacity and sent planes to the scrapyard. If people now want to fly again, and there's more money, and there are fewer planes, what's going to happen? Prices are going to go up. The same with hotels. The same with shops, with restaurants and so on. A lot of companies that got out of business, lower supply, more money, prices go up. The oil price has recovered. I remember last time when I made a pit stop at A5 in Germany from Stuttgart to Frankfurt. I paid 150 euros for 2 liters, for 70 liters, so about more than 2 euros per liter. So you already can see that the price of gasoline is already pushed up, which means in turn also other prices are going to be pushed up. In the US, we're going to have inflation. And there in the US, it's also going to happen that the central bank is going to raise the interest rates. And that's also why the stock market is not booming anymore, because the stock market is worried that interest rates are rising. It's also the long bond yields are rising, which at the same time means that this US Federal Reserve is trying to get a soft landing that basically is the increase in the economy and the profits and the cash flows of the companies would push stock prices up. The rise in interest rates would push stock prices down. And then you have a soft landing of asset prices and have a return to normal central bank policy. That's what they're going to try. If it works, we'll have to see. In China, they still have normal central bank policy, because in China you still have 3% interest. And in Europe, because of Corona mismanagement and political chaos, you can see across the continent, you're going to have prolonged problems, and they cannot raise interest rates. So either you're going to have a Japanese scenario where basically you have very low growth, negative interest rates or zero interest rates, and as a subdued economy, or you could also have stagflation, which means you have an inflation, possibly low interest rates because you cannot raise them because the economy is in such bad shape, and no growth. So Europe is having substantial problems. As they would call Europe the not anymore the first world, but in the future the second first world, with the first world being reserved for the United States and some other Asian countries who have managed the process of Corona obviously better, especially the vaccination process.
Okay, very good. Thank you for the scenario you depicted about the various worlds. I mean, the various universe that we have globally, the American one, the Asian one, and the Europe that is going to be no more the first world, maybe. Who knows? And let's see. And I would like to jump back to Mr. Jungen with a question about the monetary and fiscal policies and what are the consequences of these policies on the stock market, but also in parallel on the real economy, and whether we can expect more easing by the central bankers in the next years, or if the policies are going to change. And so what can be the effects of a change in fiscal and monetary policies in the next maybe 5 or 10 years, or after the pandemic?
Well, I would be glad to know if we would know what they were going to do in the next 5 months, mind you, in the next 5 or 10 years. I don't think, as Paula said the other day, we won't have a large change to expect at least not in the next year to come. We are, in terms of fixed income, probably at the lowest level, the third lowest level in the last 190 years. So according to the data you got from the Fed. There will be no major changes in the policy. They won't make a change if the policy goes, oh, we have an inflation of 1% or 2%. The ECB thinks finally we are happy that we are getting 2% because their mandate is that they become active if they are over 2%, and 2% would be accommodative for them. The ECB had been hoping for to cross the 2% benchmark for quite a while. I don't think that this is nonetheless of major influence. I think what the major influence is going to be is, where do we have growth in the next years to come? And what is driving the growth? Is this simply government spending, or is it something completely different? Does government spending has a major impact on growth? It may have an impact on wealth creation in the sense that people save money and people spend money, but most likely is the demand side less important than the supply side, and that is driven by innovation. And here we see a dramatic shift in numbers. If you look on the FDI numbers, for instance, foreign direct investments, we have a collapse in FDI in 2020. This should be of concern to us. In 2020, FDI in the world, foreign direct investment, it totally collapsed by more than 40%. The interesting thing is, last year, FDI flowing into China for the first time is larger than FDI flowing into the United States. So from a recipient country ranking, China in 2020 was larger than the US for the first time in the history. This is we should be thinking about. I wouldn't say concerned, but at least we should be thinking about what does it have in a long-term aspect. FDI is basically in investments. It's not consumer spending. It's not money on the stock market. This is money invested in capacity. This is capacity maybe in software, maybe in hardware, but this is to stay for some time, at least to stay. This is a dramatic shift in the structure of industry in the world and into particular innovation-driven economy growth. So this is one of the major parts. If you look on venture capital, investment in early stage of young newly created firms. Here we see now in last year, not for the first year, China is larger than the EU by far. It's not as large as the US, but if you take venture capital, US and China, and add that up, you have more than 50% of all the venture capital in the world, almost 60% of venture capital in the world is spent in those two countries. And I think, again, that should be we should ask questions. Why is it? And what does that imply? And if you look at for foreign direct investment, this is rather more later stage, established companies and projects. And then you look at the early stage in creation, new company creation, there you see that there's more happening. Almost 2/3 of the world is happening in the US and China together. And we in Europe, this is why this should be of concern to us much more than some media hypes on the stock market as well. So let me stop here for that topic. But I think that I just simply want to draw the attention to some major forces which are much less aware in the public and known than these kind of media hype, and whether some people now speak about market, what's the speculation. Everything is about speculation as far as the future is concerned. According to Karl Popper, the future is difficult because we ought to know what by definition, logically, we cannot know to make the right decisions for the future. We cannot know that. And therefore, we all are speculating. Some people are speculating on a much longer term, and some others on a shorter term. And the question is to remark on people who were speculating. Now, who was the one who was speculating? Were it the shorts who were dumping the stock, or were it those who wanted to go long with the stock? At some time, the short percentage of all outstanding stock was 100% short. Now it is 14% at present. So we have huge swings, but their economic effect nationally and mind you globally is very, very little.
Thank you very much for providing us with this vision, this overall scenario. And I will come back to you, Mr. Jungen, after Mr. Hörhan with a question about innovation and the next drivers of the market. But now, getting back to Mr. Hörhan, well, Mr. Jungen spoke about innovation driving the markets. So my question for you, as an investor, as somebody who teaches also people how to better invest, so a financial educator, can we consider what happened with the GameStop? But I would like to highlight that it's not just about GameStop. Other other stocks, other securities were part of this short squeeze situation happen. Well, so can we consider what happened with those stocks an innovative way of investing? I mean, can for real the small amateur investors sabotage the big investors, such as the hedge funds or pension funds? I mean, the big powers, or it's just a storytelling pumped by the media and the social media. I mean, the social investing is something real that can have a future. Is that innovative, or is just speculation?
Well, basically it's speculation, but the tools are innovative. Basically, right now, because of technology, you have democratization of investment. I mean, in the past, let's say, even in the last financial crisis, most retail investors ran out of the door and they didn't come back. Like in 2000 and 2008, they didn't participate. And a couple of tools like Trade Republic, all Scalable Capital, and all these brokers, which allow you to, interactive brokers, buy shares on margin, register in a simple way, use an app just like a casino. It's playful. So it allows people for a much larger audience to participate in the markets. And at the same time, there's a lot of financial education today about everything, including real estate, including gold, including cryptocurrencies, including shares, including forex trading, whatever. And obviously, this also brings a larger group of people into the game. And the third thing is right now everybody was at home and had time to play, basically. So the tools were obviously used, were obviously technologically innovative, semi-innovative, because we have new technological tools. But the rest is obviously speculation, and the amount of people participating has become much larger. I mean, in the past, you would have said, if you're a taxi driver and say to buy a piece of real estate, oh my God, I have to get out of it. If your aunt who had never any good hand with money tells you, I'm going to buy Bitcoin, you have to say, get out of Bitcoin. If your grandmother says, who also had never known about any shares, I'm going to buy shares now, you know, it was time to get out. This time it was time to get in, because these guys are pushing the market further because there's more buying power, and a lot of it is fueled with leverage. And one can only hope that there's no big unraveling of this, because my description is the world is dancing on a high pressure volcano. The markets and the economy injected with big drugs, cocaine and everything from the central banks, and the people injected with drugs and alcohol because they take it, and pharma drugs because they are basically in disarray. The only problem is if a party stops, well, it is, it's bigger the collapse. And in the US, I do believe, and in China, that the soft landing will work. There's a good chance that in the US, with the policies they made, they can return to a fairly normal central bank policy, push the economy with the 2,000 billion fiscal package, and also with their advantage, which Peter Jungen correctly said, technology, venture capital, and so on, which basically together with China, they fight for the world supremacy in these fields, and they fight very hard for it. You can see it's not a pleasant fight, which also could entail future risks. Very seriously, by the way. But in the US, I think it's possible. In Europe, it looks not very good because there's a lot of asset inflation and there's no economic base for it. And the economic base is declining. So that is something, in Europe, I think the ending could be more dire than the United States or China. And in the end, the world match is US versus China. Who is number one in technology? Who is number one militarily? And as you can see, the World Trade talks in Anchorage were very chilling. They were not cordial, didn't even follow diplomatic protocols. There's big mistrust, big competition. If you look at TikTok and all this stuff, you know, there was already economic fight. And then you also have a real political fight, which could in the next few years become into a dangerous fight, including a war. is the thing with Taiwan. Because if this explodes, then we have big power. And that's the question is whether the US and China will in the end manage this conflict well, or if they don't manage it well. Because if they don't manage it well, this could end up in wartime scenarios, which then obviously will be disaster. If not, if they manage it well, one of them or both of them are going to dominate the world, and Europe is going to be a bystander. And if Europe continues to be mismanaged as it is, and perhaps have also left socialist governments in Germany and other countries, then I do believe that Europe at some point will have problems of keeping its status as a world currency, which currently it has, which allows it to print money to a very large extent.
Well, yeah, I saw that Mr. Jungen raised his hand during Mr. Hörhan speech. So you are allowed. You're allowed, Mr. Jungen, to reply and to
thank you.
Your consideration.
Very briefly on the last point on China, I think maybe Hong Kong is going to pay the price. Hong Kong is low-hanging fruit for China. For the simple thing, there is a treaty. And so they know they will have Hong Kong one day.
They already had it.
They had it. It was part of China and is going back to be part of China. And for the Hong Kong people, it's only the way that we can hope that China is changing more in the meantime than Hong Kong has to change to accommodate China's policy. Whether that is going to happen or not, we do not know. But maybe at the end of the day, Europe would do a very good thing is open the doors for those people from Hong Kong who don't want to stay. They are very entrepreneurial, very risk-taking people, and these are exactly what we need in Europe. On the two remarks, basically on two issues. The one is you say that in the future, Europe will lose out. I disagree with the word in the future. We are already in the middle of it. And unfortunately, to say that, Germany, again, is leading the pack. Germany was leading in a different way, but at present, we are leading the pack for a country to becoming pretty irrelevant. I'm not going into all the details, the time doesn't allow. But the other point is, you made on the markets and the younger generation. That in Corona, we see something very, very interesting. For many years, in Western Europe and in Germany, it was not in to own shares or to buy shares. And you won't believe it. The German Aktien Institute, Shareholder Institute, has done a public sounding out of and a test. And they came to a very interesting conclusion that in the middle of Corona pandemic, the percentage of Germans buying shares is rising. It is rising over the total of the population, and it's between 25 and 30% increase of the numbers of shareholders over all age groups. But here comes the interesting stuff. The age group of between 14 and 29 years has risen in Corona by more than 60%. So probably it was a pretty low basis, but the simple fact that this is rising in the middle of Corona, that is one positive sign. There's an indication that people take it maybe for the longer shot and that there is some trust in markets more than before. I personally think there are indications that the hypothesis of the left and the Greens, if we have a problem, we call the government, and the government does a better job than markets. I think Corona crisis has proven that that is totally wrong. And then whenever governments are able to get into and try to substitute markets and management, they totally fail. And that can be visited in Western Europe now, and including in Germany in an unfortunate way, but it's true. So the good news, all of the bad news is that maybe there will be a renaissance of markets and of entrepreneurial spirit, and with that of innovation, and for the climate, for startups. And maybe that is the better chance, and if not the only chance, for the future of Europe.
Mr. Hörhan, before you answer, I have to warn you, both of you, that we have just 5 minutes.
Yeah, okay.
I have a couple of questions for each of you. So I will let Mr. Hörhan to reply to Mr. Jungen, but just 1 minute.
I would
have a couple of questions for both of you.
I would, to some extent, disagree with you. I mean, obviously, in the pandemic, you had everywhere central bank and state capitalism. In the US, you have huge fiscal packages, which means the government has basically subsidized huge industries with huge packages. They have done helicopter money. So basically, you have had the printing press and the central banks even deciding which industries and which companies get rescued and which don't. The same has happened in Europe. The same has happened in China. The only difference is that the United States basically still fosters entrepreneurialism. It fosters, in the end, a somewhat market-based economy, still influenced with a lot by the government, and it gives the right incentives for people to work. And right now in Germany and also in other European countries, we do face the danger that we have a left socialist, or to some extent communist-inspired government. Perhaps communist would be a little bit overdone, which basically tries to take the money from the people who work and who build companies and redistribute it to everybody else, and that won't work.
They always take the money from those who work. From who else they should take it?
Well, and from the companies and so on. And that is
sure.
something.
Sure, sure. I agree.
Which is going to be very difficult. But we do have, and I also think in the pandemic, it was necessary that the governments put so much money into the economy. There was huge fiscal packages all around the world, including the United States, including Switzerland, and including China.
I gave you the numbers, yeah.
Okay, now I have to interrupt you. I'm sorry, because I have one question from the public. Somebody from the public, from the audience, direct message me. This is a question for both of you. Then we're gonna end our live. Very interesting, but sorry, we have to do that. The question for both of you is, to what do you attribute Europe's misstep in terms of vaccine distribution, and what should be the role of markets versus government intervention in Europe's recovery post-COVID, also referring to the stock market and the real market? First, Mr. Jungen, I would say, and then Mr. Hörhan. And
okay, on the vaccine, I mean, first of all, the development has shown that no government institution was able to produce the vaccine. It was two, among others, there were two scientists who had an entrepreneurial spirit, were innovation driven, started a business years ago, it's not last year, years ago, and they had at least two risk-taking investors, people who had earned money by selling another company they inherited. But they didn't spend the money wherever gambling or what in the world. They invested it. They believed in the concept of the people who had created the idea of that particular vaccine. The idea was for cancer treatment, and it was against cancer and not for corona. They didn't know. So it was only in last year that the government said they were supporting financially in order to could build up facilities. But the important thing is, Corona has shown that it is the private sector who has created the vaccine, and there's no government institutions who did that. And I think that because in the Hayekian sense, no one could know before, and with the pretension of knowledge, that we would have Corona, and that for Corona, that was the right stuff to fight it. This is a very, very strong proof for Hayek's critics of government authorities when you said with the pretension of knowledge. They do not simply have the knowledge. And as I said before, in relation to that as well, they're not even able to manage buying the stuff or distributing the stuff and make the vaccines for the people. I mean, wherever the government comes in at the moment, it's no speculation. They prove every day that they are not able to do that. On the markets, maybe you want to go on this more in detail. I've said a lot about this already. Yep.
Basically,
just a comment. I would say that in Italy, our new government actually is trying to also cooperate more with the private sector for the distribution of vaccines, which is confirming the incapacity, I would say, of government to cope with the distribution of vaccines. Please, Mr. Hörhan, your turn, your final remarks.
I mean, basically, the statement that that governments are only bad, I would also disagree. With some government, the government might not be the best. I fully agree with you. And the vaccine development never should be done by governments because it destroys the incentives. But obviously, vaccine procurement, other governments have done simply a better job. If you look at Israel, if you look at the United States, and even the chaotic Boris Johnson, they simply have done a much better job than the European Union. And I think it's also based.
You know why? You know why? How it happened? You should give the people the details.
Well, basically, I can tell you also one thing, because we have a couple of misconceptions. Number one is Europe is drowning in its own bureaucracy. Number two, we have big data privacy. That's so important. Data privacy is going to kill Europe, and it's going to kill the quality of life in Europe, because everybody talks data privacy. Oh my God, Israel sold its data. And that's why they got the first shot. Yeah. And the same thing, data-driven medicine, which is going to be the future of medicine, is going to prolong lifespans, increase the quality of life, and reduce the cost of the healthcare system, requires data. If you don't give the data, you can't have data-driven medicine. That's the first stupidity where Europe has made, I think, a huge mistake, and is making continuously huge mistakes. Other countries see this much more laissez-faire, including the United States, the UK, Israel, and that's why it works. The second topic is obviously that Europe, there's so much discussion that it's fair, you know, who has the right to be vaccinated first? Oh my God. And other countries are more pragmatic. The United States, in the end, they say, okay, if you're here, you get vaccinated. It might not be fair. If you're poor, you don't get it. But in the end, they achieve the result. And in Europe, the bureaucracy combined with DSGVO and data privacy and fairness yields to the fact that we have so much chaos. Yeah. That's
two lines to the reason.
30 seconds, please.
Yeah. Okay. In the UK, Johnson made the right decision to charge Kate Bingham, a venture capitalist, to buy the stuff and go in the market and do that. And she was only reporting to him directly, outside the bureaucracy. In China, in Israel, the Israelis made a deal with BioNTech and agreeing that they would give them the data after the vaccination, and also with the people who what the results of the vaccination was, which is not possible because of, we say, because for privacy and data protection. So the Israelis had a very good reason for BioNTech to give the Israelis the shots first, And the British had a very good team in working there, and they bought the stuff in May last year. And the EU Commission, it took the Commission until November to enter in search of these contracts. And if you look on the lousy contracts, which is best endeavor, it's a laughing stock which the Commission made out of Europe.
Perfect. Thank you very much to both the speakers we had that actually cover also for one missing speaker that couldn't reach us, but it was a very, very
Pleasure.
discussion. They gave us amazing insights, amazing scenarios, and also they raised excellent points. And let me say that this is why we are running these seminars together with the Austrian economic centers that I thanks for the big effort. Um, Thank you very much again to our speakers. Thank you to our audience. And I would just to remind them that you can follow, you can watch again our live event, both in the Austrian Economic Center official channels and Competere ones.